Good morning, good evening, and good afternoon, everybody. Hope everybody's having a fantastic week. It is Thursday. That means it is time for high probability short term profit with Mike Wade. We're going to go over a quick market review. We're going to talk about the impact of these Trump tariffs. I don't know if you've heard anything about them. They're nowhere on the news at all. Just kidding. Then we're going to go over the snipers portfolio. We had two of them closed for winners. Now we're at 15 straight wins, 92% win rate. We're going to talk about a couple of recent trades that we had in IBM and GE. Then we're going to go over a current trade. I'll let Mike tell you all about that one shortly. And then we're going to go through some of your stocks, some of your symbols, that kind of stuff. So get those in the chat. Let's get to it. Mr. Mike Wade, how you doing, sir?
Good morning. How you doing, buddy?
I'm doing good. Nice and rested. Slept really well last night. I'm ready for the day, you know?
You were sick last week, weren't you?
I was, yeah. Me and both of the kids and my wife, we're all sick, but all doing better now.
All for one for all.
Yeah, exactly.
Are you going to be watching the Super Bowl this weekend?
Oh, absolutely. Yeah.
Yeah, me too. I got a Super Bowl party, and we're gonna do the whole thing, man. I can't wait.
Nice.
Okay,
nice.
What you said something about what Trump tariffs? What
Trump tariffs? Yeah, I know you probably haven't heard anything about them at all, but
I ain't heard about no Trump tariffs. I have heard about Trump tariffs, and I want to talk about the impact of the Trump presidency. We've had one before, and lots of things happen when Trump is president. And within a month of becoming president, it's already started to happen. So I'm going to go right to a chart and show you what happened with the tariffs, right? So this is a chart of the SPY. This is the ETF that tracks the S&P 500. And you can see movement like we don't normally see. This is when Trump won the election. Gap, move up, and then gap down. What about Trump tariffs? What are they going to do to the market? The market's in speculation. Without even Trump being president, the market started to get really volatile, made another run. And then the Fed came out and said, tariffs, and I don't know if inflation's going to go away, if stuff gets more expensive. And by the way, when tariffs are levied against our foreign trade partners, that makes stuff more expensive. And did you know that the people do you know who pays the tariffs? We do. The companies that are importing goods in the United States, they pay the tariffs. So those costs are directly passed along to consumers. It is a very big risk for inflation when tariffs get levied. All right. So then we had all this volatility. I'm not going to go through all of it, but man, it's unusual to see all this kind of a gappy nature in the stock market. And then we had a nice run up to all-time highs right around 6110 on the SPY. And then we had a gap down. And let me show you where the tariffs came in. All right, so this was last Friday, and the markets were like, is it time to get to another all-time high? And then the markets fell away before the tariffs were levied on Saturday. So the news started to leak out. Tariffs were levied, 25% tariffs against Canada and Mexico, and 10% to China. And then the markets came down hard on Monday morning. They opened here. See where my pointer is? That's where the markets opened. So we had tariffs on Saturday, tariffs on Sunday, tariffs Monday morning, and then no tariffs for Canada and Mexico in the morning. And then this big correction got lessened. And now, since Trump suspended or paused the tariffs for Canada and China, the markets have recovered. And now we're heading back towards all-time highs. All right, so what does all this mean? It means with this president, you've got to expect volatility. Heck, the volatility is volatile. It's crazy. So you got to pick market direction, but be very cautious and expect sudden moves in the wrong direction. Could be up too. So, Ryan, the markets are extraordinarily volatile, the most volatile I've seen since the last time Trump was president. And I think we can expect it going forward. So if I can leave you with anything right now, is you go pick your direction, follow your rules, but be ready for the market to move against you. So that is where we're at. And perhaps over the next year, things will soften out a little bit, but at least for now, expect market volatility. Now, are we worried about that as snipers? Yeah, not so much. We are more immune to volatile markets than those that trade direction. You know, some people buy stocks if they're bullish. They might even short stocks if they're bearish. Some buy call options if they're bullish. Some buy put options if they're bearish. We do something even beyond that in complexity, where we sell options where we don't think the stock's going to make it to. So that's the sniper approach. We call it high probability short-term profits. What we do here, and I'm going to demonstrate how well we've done here in a minute, Ryan. We'll put up that chart for the performance. But you know, we get in and get out. You know, sniping like a sniper from a distance, a relatively safe distance, and putting in as much probability as possible. Get in, get out. Average run rate is about 10% every 7 days. Make your 10% every 7 days. Use the same money even. And let's put up that performance, Ryan. I mean, it's pretty astounding. We're up to 15 straight wins. What? Yeah, this is when I think the last time we had a streak this long, we got up to 18. That was last year. We had a win streak of 18. Now we're at 15. And we're going to probably win on the current open trade we have, which will be 16. And then I think we're going to win on the trade I have for today. That'll be 17. So I'm starting to get a little nervous about the win streak. Now I'm focused on win streak. But anyway, point being, let's just keep doing what we're doing. Everything is rules-based. We have a manual we'll talk about here in a few minutes. We have a manual that'll walk you through the 5 steps of sniping, high probability, short-term profits. Currently, since we started this show last year, beginning of last year, we are operating at a 92% win rate. We've had 61 trades. 56 of those 61 trades were winners. What? Ryan, I'm doing the R gang thing, you know, the spanky. What? If anybody's wondering what I'm just trying to have fun in my mind, and that's what my mind does. So hopefully it's not too abrasive. Anyway, we're operating at an 11% plus win rate every 5 days. We typically normalize to around 10% every 7, 90% win rate. It's consistent. It happens over and over again. Get on base, get on base, get on base. That's the idea. I have a community of, I have a company called Michael Wade Trade Coaching, and we have a community of people that are sniping, and many of whom, for the first time in some decades, and they're actually making money for the first time using options. So this is really sort of a dear to my heart type system that I've derived over 25 years of doing this. So Ryan, we do have a few trades to talk about that have recently closed. Let's go right to IBM. IBM, we did this last week. And I'll show you quickly the trade. By the way, if you want to know what this software is, it's called Tom's Trading. It's called Tom's Option Tools. And you can go to tomsoptiontools.com and find out more about it. But I use it to track trades and to visualize with a risk graph where my profit and loss is in the trade. And we got it. So here's my profit in the trade, and here's my my risk in the trade. This is the stock price. So I can very easily translate where I start getting into trouble on the trade, where the lines extend over to the left. That's where loss lives. So I can visually depict where my profit and loss is. So the great thing about IBM, and we got in the morning when IBM gapped up to here. We got in. I actually got 42 cents in a simulated environment, but I tracked it at 25 cents. So we nabbed 25 cents. Let me show you this. I'm going to back up one day. So even on the day we entered, and we were about break even by the end of the day. But the next day, the stock stayed up and the value of the credit diminished, and we were able to buy it back. Having sold it for 25 cents, we bought it 25 cents times 100 contracts controlled is $25. One option contract controls 100 shares. So you multiply the price of the option or the credit of the spread, or whatever you're paying or receiving, times 100. So that gives us $25. We did it twice so $25 a contract times 2 contracts is $50 of credit that came into the account. And then the rule is, right out of the guidebook, is we buy the spread back for 10% of the original credit. So 10% of 25 cents is 3 cents. We closed this trade out in 2 days. We got in on Thursday. We got out on Friday on IBM. Ryan, talk about short term. Doesn't get much more short term than 1 day of time in the trade.
Yeah, no kidding. Hey,
good, right?
Mike, is there like some kind of tweeting or something like that behind you? Like there's like some sort of sound coming from your mic, and I'm not sure exactly what it is.
You know what it is, man? I live in the jungle,
and
it's cicadas.
Oh, gotcha.
In the States, we get them every 7 years. Costa Rica every year, and these suckers are loud because I'm in a jungle and there's nothing but cicadas all around, and
gotcha.
That's what that is.
So you can't tell them to be quiet, I guess.
I have, but they don't listen. I've tried. Maybe if I shut that might help. Does that help a bit?
That helps a lot. Yeah. Thank you.
All right. I don't even notice anymore, man. My buddy of mine is building up in a mountain on top of a mountain, and I went up there one day, and it was so loud I couldn't hear them, man. It's jungle life. It's jungle
Nice.
life.
Thank you. I appreciate it.
Oh, you're welcome. Hopefully that helps. All right, GE was another one, Ryan. And we got 3 minutes. I'm conscious of time, so I'm going to just quickly go through GE. Same thing happened on GE. Bullish. Move after great earnings. Same for IBM. Both had great earnings, lifted guidance. We got into GE on this day. The stock came down. We stayed in. Stock then bounced, and we took this one off. We got in on the 23rd, and 7 days later, there's another 7-day trade. That's the average. We're in and we're out. We do have one other that's currently open on Electronic Arts. Now, it's not a good idea to hold these over earnings. And so we got in here on some bad news about Electronic Arts. The stock tanked, and then the stock came up a bit and then announced earnings. So one of the things you do want to avoid is holding these over earnings. Now, we only have 2 days left. This trade expires tomorrow, and as long as the stock is below 135 by tomorrow, this will be a winner. You may choose to take this one off today. I'm just checking the stock price on Electronic Arts. Let me go into the Hub side. There's another piece of software you may want to check out. It's called hub.com. It's some beautiful, beautiful trading software. It even has AI signals that when they come up, I'll bring them up from time to time. So here's Electronic Arts. And we make money anywhere, but let me get rid of these other lines here. We make money anywhere below 135. And what I don't like about holding over earnings is that, in this case, a bullish run in the stock after earnings, and it's heading up towards 135. The trade's in profit today. I would highly recommend that you just shut it down and grab your profit, and not dance around with maybe the stock's going to recover way up here. Not likely, despite the great earnings. I think it'll probably fade and go sideways to down, but it could go up. But with risk as our main risk management, our main job, this one you want to take off. All right. Manage the risk and let the winners take care of themselves. Let the profits happen as a consequence of risk management. Forget about profits almost. I put on trades, I don't even really focus on how much money I can make. I focus on where I can lose. Here's Electronic Arts. It just opened flat. It's got resistance at 130. It's likely to fade from here, I think. But if you're in it, I would just say take it off and let's go get the new one for today, which is, Ryan, what's our stock for today?
It is an interesting one, actually.
Yeah, Peloton. The stationary bikes, online circuit training. They had some trouble about a year or two ago, and now they're starting to make a run. And this is the kind of news we really like. Peloton shares advanced more than 15% after ringing up better than expected revenue. So they beat on their earnings. They made $674 million when analysts were expecting $654 million. So they beat by $20 million. That's awesome. And if that wasn't good enough, they also upped their full year earnings guidance. So I call this a beat and a raise. You'll sometimes see beat and not raise. You'll sometimes see miss and raise. But the best is when they align, beat, raise. That's better. That's the best. Or I call it a bifecta, but the actual best is when a company misses and lowers their guidance. That is the best. That is the best. All right, so we're aligned, better than expected revenue, up their full year guidance. Let's go right into the hub software here and let's pull up Peloton. I'm going to add that to my list here. PTON is the symbol. Let's see where it's at right now. There it is. All right. Now, it's already rising. I got to move faster here now. So I'm looking at the stock, and I like 7. If I can get something at 7, that would be outstanding. The stock is now above 9. Look at this. This is also very interesting. The stock, and I need to move pretty fast here. I'm missing my credit. So look, the stock is now above 9. Look left. That was resistance, and then became support resistance through here. And now the stock is above 9. I think likely it will stay above 9. It's also above this red line here, which is the 50-day moving average. And what I really like about this one is when you connect these lows here, look left, support, support, support. The stock's, why would the stock drop to below that level if they beat and raised? It doesn't make any sense. It's like, what? Is this candid camera? So we need to figure out if we can get any credit down here at 7. So it's already running. I got to move. See how it's running now? I'm going to go into Peloton. I'm going to go into a simulated trading account, and I'm going to try to stop talking so darn fast. And I'm going to try for 7, 6, and I'm seeing 7 cents credit there. That means I'll probably have to go up. Well, we're going to, it's going to be tough. Let me see here. 7 cents credit. The minimum we want is 10. So 7, 6, that's $1 spread. It's only showing 7 cents. I could lift it a bit. Let's go to 750, 650. What does he mean lift it a bit? Well, what I mean is, am I willing to go to here? Am I willing to go to here, 750? All right, so again, look, there's support resistance right there, just a little bit lower. And back over here, 750 acted as support as well. So that would be a reasonable level to take it, maybe 8, but I'd say 750 max. We want the power of support and resistance to help us out. All right, so that's what I'm going to do. I'm going to take the trade here, and we're going to sell the 7. Well, let me try 7, 6 one more time here. There's 7 cents there. Let's do this. Let's sell the 750, 650. I'll give you the entire trade here in a minute. 750, 650. We're going to do 5 of these, and I'm going to ask for 10 cents. Am I going to get it? Probably. if the stock drops a bit, we will. I'll set it as a GTC. And if if you're new, don't do GTCs, because if you don't get filled today, you need to make sure you cancel the order. But I like to use GTCs because it sometimes facilitates a fill. All this talking, and the credit's already down to 5. Had we placed the trade at the open, when the stock was there, we would have gotten our 10 cents. Because I'm teaching, it makes it harder. All right, now let's go ahead and put it in. I'm going to ask 10 cents. Give the stock some time to breathe. We're going to let this trade come to us. And it's showing for 5 cents. I'm asking 10. Here is then the trade I'm just trying to put on. I gotta start putting the trades on right at the open. Here's the thing: right at the open, the implied volatility or the expense of the options is higher. And by the end of the day, that expense falls off. So we can come in and snipe and grab extra premium if we're right at the open at 9:30 Eastern time. So that's the order. If you do get filled on this order, you want to exit the trade if the stock closes less than your 750 short put, which is our line in the sand. And that line in the sand is this one here. And you make money anywhere above that line. That's the beauty of this thing. And there's very little reason, or there's no reason that I can think of, that I can see, that would have the stock drop down from whence it came. The news is a lot better today than it was yesterday. Why would the stock drop from below this line, below this support level? All right, now I can see the stock's drifting down a bit. Now, here's what you can do. Later in the day, let me show some other lines here. So this is my plan for this one. So we've got support there at 8, round numbers. We've got support at 9. I've changed the lines to make them a little more distinct. So there's 9. There's also a support resistance at 850. I'm not even really looking. I just know there will be support and resistance every 50 cents on this stock. All right, so here's the plan then. If the stock remains above 9, which is also, we also have the 50-day average here. So if the stock is above 9, above the 50, it's above 9, you could consider coming in to 8 or even, now look, the stock's starting to come down. So here, let's go back. Now I need to check to see. The credit's still not there yet. But if the stock comes down a little bit, then we have a good shot of getting filled at this 750 level here. So here's the plan. Do nothing until towards the end of the day. And if you notice that Peloton is above 9, then you can start considering coming in closer, maybe to 8. No closer, though. Listen to me, please. No closer than 850 on this. I wouldn't go any closer than 8. So I'll leave that with you. Ryan, we're going to let this trade come to us. We're either going to get filled or we're not. We're not filled by 3:30 Eastern time today, then I'm going to come closer. Because what I don't want to have happen is that for some reason the stock breaks down and gets close to my short strike, then I could lose money. And this game is about not losing more than winning. All right, Ryan, let's take a look at some stocks from our beloved community. What do we got?
I am not seeing any. Wait, PM, good earnings, good guidance, PM.
Let's take
That's
a look.
either them saying that the afternoon is going to have good earnings or PM is a stock.
I'm assuming it's Philip Morris.
Yeah.
Oh, you knew that. I knew you knew that. All right. Yeah, is that a time or is that an actual stock? Now look, the stock has obviously it gapped up. It's had earnings. Here's where it was last night. Here's what it is right now, and the stock has gapped up. All right, so obviously some good news, or at least traders consider it good. Let's go to finance.yahoo.com and go to PM. Philip Morris. They make cigarettes and other things like that. Let's see. Earnings guidance was big. Ooh, that's a good one. Philip Morris International beats on estimates on strong. I'm not sure what ZYN is. I'm not a smoker. And then that must be the smoke-free product, I imagine. Earnings beat, lifted guidance. Ba-boom. That's the bifecta. It's a good one. And so now the game would be to find a line in the sand. Now, unfortunately, what's tricky, let's call it tricky, what's tricky when a stock gaps up $14 from one, that's over a 10% gain, 11% gain, is that the stock is way, way up here, and it's difficult to find prior support resistance to derive a line in the sand. So the only place I can do that is here. And so that level is 132.50. I'm a little nervous about this. I'm a little nervous about 145. 145 is a round number. Round numbers is where support and resistance, which is what it is so far, comes. And then what can happen is if this resistance level holds, then the stock could fade. And that's what I got to watch for. So I don't want to get up here to 140. I'd say 132.50 is as close as I would get on this one. But 130 would be, I would do 130 right now if I could get 10% credit on the width of the spread. So I love the stock, but it could fade, and ain't nobody got time for that. Any other ones?
There's Roblox, RBLX.
Hey, do your kids play Roblox, man?
No, not yet.
Yeah, when they find out.
Yeah, trying to keep it away from as long as possible.
Wow, look at Roblox. The thing is taking off, man. Well, I did check this one this morning. They had some good earnings. Let's take a look. RBLX. Roblox, let's see. Bookings miss. Roblox stocks sink. Bookings miss and weak forecast. So let's see where Roblox is. I'm not seeing a quote right now for some reason on this one. RBLX is the symbol. I tell you what, I don't see, for some reason the data's not coming through on this one, but I know the stock dropped. So I'm going to go into my broker's live chart, and nice. All right. So here's an example of what I was saying before. All right. So look, 60. Where did the stock open? Well, it opened at 60. Look left. Support, resistance, support. It held here. The stock's making a run. So analysts like it at 60 and they're taking it up. So you got to be really super duper careful on this one. And I would say for this reason, when you see that happening, you either stay away and wait till the end of the day to see what really happens. The only trade I would even think twice about would be selling up here at 75. That's where it was last night. This stock was on a tear, came down to 60, has bounced, and it could be back up to 75. It is possible. So be patient. Let's see what the stock does later in the day. Indeed, it's now above, it's hitting 65 now. Look at this. It's hitting 65, which is another round number. So if it breaks 65, it could very well come up to 70. And then you don't want this thing, you don't want your line in this stock to breach your line in the sand. So basically the reaction on this one is giving me pause. So be careful. The news is still bad, though. Missed and lowered. I mean, come on. All right, Ryan.
That's all I got.
All right. Sounds good. You know what? I'm going to give you one more. This is MOH. And the stock, actually, I don't like it anymore. They came out, they missed on estimates and lowered, but the stock is bouncing. I do like it, though, below this 200-day average level. So maybe up here at 330 would be interesting. 330. And the reason it's interesting is that this blue line here is the 200-day average, and that's resistance, a strong one. And then 330, the stock hasn't been above 330 since November. So, Ryan, I think that's a wrap for today. Oh, one last thing. I almost forgot, Ryan. How do people learn about the sniping system? Well, we have a guide. There's a guide for it. Mike's Sniper System, High Probability Short-Term Profits. This is a free guidebook. It takes you through the 5 steps of sniping. The intention that I have is that we give you material that can help you snipe alongside Ryan and I. And this is it. There's a link below my face here. And just give us your email address and your name, and we'll send you the guide by email. And you can join us next week. And we'll snipe together every Thursday morning at 9:15. And if there's ever a time for you to grab the guide and join us on Thursdays at 9:15, it's now, because we are in the thick of earnings season. And you want to take advantage of that. Hey, Ryan, thanks a lot for all your support today, as always.
Thank you, sir.
Who are you pulling for in the Super Bowl, man?
I'd like to see somebody else win it, but like at the same time, I just can't vote. I can't bet against the Chiefs, you know?
Yeah, you can't. They'll figure out a way to win. Well, I'm a Dallas fan, and that means I'm not a Philly fan. And so I'm pulling for Kansas City as well.
Nice.
Go Chiefs! All right, everybody, have a great weekend. And you too, Ryan. We'll see you next week at 9:15 Thursday on the Hub channel. Bye, everybody.